Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 282 on August the 4th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Nikola Corporation, Freeport McMoran, and JD.com, and we discuss three new trades on Rite Aid Corporation, BP, British Petroleum, and Cisco Systems. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, with a combination of videos and live coaching calls. So if you're ready to take your trading to the next level, send me an email to schedule a phone call. It's been a while since we've made it beyond 3 consecutive week-over-week gains in the U.S. equity markets, and we did not make it this time. The Dow Jones Industrial Average lost 393 points, closing at 35,065 points. The S&P 500 index lost 104 points, ending the week at 4,478 points. And now it's time for the topic of the week. The topic of the week is legging into spreads. That's a trading floor term or trading floor terminology that I'm going to go ahead and define for you right now. So when you're using an option trading strategy that uses multiple strikes or different types of options, each side of the trade is considered one leg. For instance, in a credit or debit spread, there's an option that you sell and an option that you buy. Each of those can be considered one leg of the trade, meaning that a credit and a debit spread have 2 legs. An iron condor actually has 4 legs. When traders talk about entering one side of the trade followed by the next, it is considered legging into the spread. And many brokerages will allow you to designate a spread and trade it in one combined order, like knocking it all out in one swoop. However, I have received emails from several of you who use brokerages that don't allow spreads to be executed all at once. Therefore, you have to execute each part of the strategy separately. That is legging into the trade. When you're doing this, you might wonder which side you should do first. Well, if you're trading a small to medium-sized account, your brokerage might not allow you to sell naked call options. That means when you're entering one of these trades, you'll need to execute the buy side of the trade before entering or executing the sell side of the trade. That same situation can occur if you're trading a put spread and you don't have the full amount of money to purchase 100 shares of stock per option, so they won't let you just sell the naked put. The biggest challenge when legging into a trade is that prices can move on you. In fact, they will often move on you. So this will affect the overall price that you enter the spread. In general, I'm less concerned about losing a penny on a trade. It's more important that I actually execute the trade than it is getting the perfect price. However, it just depends. So again, if you use a brokerage that allows you to execute spreads in one order, then you won't have to do this. But if your brokerage account does not allow combination spread orders, you'll need to execute each side of the trade separately, and that does open you up to some risk. That is what we call legging into the trade. Just make sure you're keeping track of your spread price so that you can manage the risk accordingly. Always be maximizing profit and minimizing risk. So let's get into the trade review for last week's trades. We're going to start off with the covered call on Nikola Corporation, symbol N as in November, K as in Kilo, L as in Lima, A as in Alpha. At the time, the stock was trading for $2.27 per share. I looked at buying stock and selling the August 2.5 call at 32 cents, which could give us a return of 24.23% in 3 weeks. Well, shares of Nikola Corporation gained 23 cents, ending the week at $2.50 per share. The call option we sold gained 12 cents, leaving us with a net gain of 11 cents if we were to close the trade out immediately. Of course, we stand to gain 5 times that amount of money in 2 weeks if stock expires at or above $2.50 per share. This trade is working out, so really no adjustments are needed at this moment. Just keep an eye out on the stock price over these next couple of weeks and be prepared to defend this trade as needed if the stock does begin to move against you. Next up, we have the credit spread from last week. We looked at Freeport McMoran, symbol F as in Foxtrot, C as in Charlie, X as in X-ray. At the time, the stock was trading for $43.61 per share. I looked at selling the August 42.5/42 put spread at 15 cents, which could give us a maximum possible loss of 35 cents per spread. Well, shares of Freeport McMoran lost $1.09, ending the week at $42.52 per share. The out-of-the-money put spread that we sold is still out of the money, but we are right on the edge of it being at the money. In fact, when I was choosing the various prices, the various puts that we could have sold, some of you may have wondered why I chose a put option so deep versus one of the ones, a stock at $43.61. I could have sold the 43.5/43 put spread. Instead, I went a full dollar lower because I still liked the price that I could get, and I wanted to move it as far away from the at the money price, and it turns out that that was the right decision. So if you were to close this trade out immediately, you would actually lock in a loss of 11 cents. Still, if the stock expired right here in 2 weeks, this spread would expire fully worthless and we'd keep the full premium because it's totally out of the money right now. Now, I would not look to make any changes just yet, but I'm prepared to sell a call spread to create the iron condor or to turn the credit spread into a debit spread if prices are below $42.50 in expiration week, which is only 2 weeks away. So stay on top of the stock move and have a plan of how you'll manage the risk. Our final trade from last week was a debit spread on JD.com, symbol J as in Juliet, D as in Delta. At the time, the stock was trading for $40.53 per share. I looked at buying the August 39.5/40 call spread for 30 cents, which could give us a maximum gain of 20 cents, or that's a 66.67% return in 3 weeks. Well, shares of JD lost $1.44, closing at $39.09 per share on Friday. The in-the-money call spread that we bought is now out of the money, but don't fret just yet. I'm just looking at the stock chart, and I don't tend to fret over a few days of lower prices. As well, there's an earnings announcement coming up on August the 16th, which is 2 days before expiration. Now, for those of you who don't like the risk, you could flip this from a debit spread to a credit spread. If you sold the August 39.5/40 call spread, you would collect 35 cents, cashing you out from the original 30 cents that you spent on the debit spread. Now, you could also sell the 38.37.5 put spread, collecting 18 cents. That would leave you short the 40.5, 38.37.5 iron condor at 23 cents. That leaves 27 cents of risk on the table, but also keeps you from a loss of 30 cents if prices were to remain below our lower strike of $39.50. This is a bit more complex topic, so if you'd like a deeper explanation and you don't understand what I just said, just shoot me an email. I'll explain it to you pretty easily, because I definitely like all of you guys to understand what I'm talking about on the show. So that's it for the trade review from last week's trades. We only have 2 more weeks before August expiration. I am going to continue using the August 18th expiration for the trades, the 3 new trades this week. That means these are 2-week-long trades and extremely risky because of the shortened amount of time. That means we don't have a lot of time to make adjustments that would still keep us whole financially if there was a loss that incurs. So, as always, is caveat emptor. In fact, I just share the trades that I'm either in or that I'm considering on the show. This is not and should never be considered financial advice. This is entertainment. It would only be financial advice if I got to split the profits with you when you make money using these trades. So definitely not financial advice, but I really do appreciate you guys listening. All right, let's dive into the new trades. We're going to start off with the covered call on Rite Aid Corporation. Symbol R as in Romeo, A as in Alpha, D as in Delta. The stock ended the week at $2.67 per share. I'm looking at buying stock and selling the August 3 call at 35 cents, which could give us a return of 25.47% in 2 weeks. Now you enter this trade by buying stock for $2.67 and selling the August 3 call at 35 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price on this trade is $2.32 per share, and in real terms, the stock purchase will require $267 and you'll collect $35 for selling the option. Next up, we have the credit spread on BP, British Petroleum, symbol B as in Bravo, P as in Papa. The stock ended the week at $36.80 per share. I'm looking at selling the August 36 put spread at 17 cents, which could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the August 36 put at 61 cents and concurrently buying the August 36 put for 44 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $36.50 per share. The break-even price on this trade is $36.33, and in real terms, you'll collect $17 per spread that you sell and have $33 at risk. Our final trade on the week is a debit spread on Cisco Systems, symbol C as in Charlie, S as in Sierra, C as in Charlie, O as in Oscar. The stock ended the week at $52.63 per share. I'm looking at buying the August 52 half call spread for 31 cents, which could give us a maximum gain of 19 cents, or that's a 61.29% return in 2 weeks. You enter this trade by buying the August 52 call for $1.72 and concurrently selling the August 52 half call at $1.41. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $52.50 per share. The break-even price on this trade is $52.31 per share, and in real terms, you'll pay $31 to enter the spread, and your maximum gain is $19 per spread. So that's it for this week's show. Thank you guys so much for listening. Thank you as well for all of the people that sent me text messages and emails wishing me a happy birthday after last week's show. You guys are awesome. I swear I have the best group of listeners, and I want you all to know each other. So I'm actually working on a project. I'm going to keep hinting to this until it's time to launch, but I'm working on more of a community scenario where you guys can get to know one another and kind of support each other as you go forward in trading. I think of the reasons why I know option trading so well. It's because my entire world was options for about 5 years. Most of my friends traded options, so we had a shared language that other people couldn't understand and couldn't decipher, right? Like, we talk about it at dinner. We talk about it when we went to happy hour, or when we were in arcades playing games. Like, I was in my 20s, so we used to go to like Dave and Buster's and whatnot in Chicago. But you know, we just were fully engaged and fully immersed in a world that was built around option trading, and that's why I got to understand it. It's hard to help, let's say, a dentist create that same experience, but if I can build a community around it, I think I can. So that's exactly what I'm going to be doing. So expect to hear about that. Those of you who I have your email, you'll certainly hear from me. I'll probably have a webinar or something along those lines to introduce it. So it might be a month or so down the line, but keep an eye out for it. And if that's something that you definitely want to be kept abreast of, shoot me an email and I'll make sure that you are on the emails for the first batch when I do share this. So thank you guys so much for listening to the show. Thank you for following along this journey with me. 282 episodes. Some of you have been listening since episode 1. and I love you for it. So you guys are awesome. Have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.